What number of years has the IRS established as the useful asset life for non-residential income producing properties for calculating depreciation? What number of years? We're talking about non-residential. Okay, so let's look at this. Non-residential. So this comes under your real estate investment section. Okay, when we talk about non-residential, all right, we're talking about commercial property. When we talk about residentials, we're talking about residence or property. Okay, so non-residential is commercial investment. Residential would be, single family condos, duplexes, triplexes, fourplexes, apartment buildings. In other words, investments that deal with residents. Okay, if you look under 1C 1 and 2, this is the IRS code, and this is what they're asking. A commercial or non-residential depreciation is 39 years. Okay, if the problem is asking you to calculate depreciation, it doesn't give you the amount of years of the useful life. You want to use the standard IRS code. That's what you have to assume, and it's 39 years. For residential, it's 27 and a half. So, for example, in the blue box, I've got an investment home purchase for a rental. Owner wants to depreciate the property annually. The house cost $150. How much can the owner depreciate annually or yearly? So this is what they call a residential straight line depreciation. Remember, 27 and a half years because it's a residence. So I'm going to take $150,000 divided by 27 and a half years, $5,455. I can depreciate annually on this residential property. You say, well, John, what does that mean? Does it go down in value? No. The IRS depreciates property, and they say, listen, we're going to assume that over 27 and a half years, it's going to cost you $5,455 per year to maintain the property. We're going to give you that in the form of a tax break. So you can deduct that $5,455 from your income earned off your residential investment, right? The rent money. So that keeps more money in your pocket, right? They're not going to write you a check for that, but they let you deduct that on your taxes. Only for your investment, though, not off your income W-2. This is just your real estate investment, okay? So each year you can do that because they're assuming it's going to take that much money to maintain that property. So that's a nice thing that the IRS allows us to do, okay? That's called a tax shelter.